Sarah and Mike, both earning $80,000 per year, with similar credit scores and banking, decided to buy a home. Sarah was pre-approved for a $400,000 mortgage at 5.5%. Mike, for the exact same loan, was approved at 6.5%. 1%. Doesn't sound like much, does it? But that single point will cost Mike over $83,000 extra dollars over the loan's life. Not credit score or savings. The difference was an innocent pop-up they each clicked in their banking app over a year ago. Sarah knew what to do. Mike had no idea he was making an $83,000 mistake. What did Sarah know that Mike didn't? Stay with me. The answer will change how you interact with your bank forever. You know the moment. Log into your online banking portal to check a balance or pay a bill, and there it is. A box slides onto the screen asking, "Help us serve you better. Please update your annual income." It feels harmless, even responsible. Proudly, you type your new, higher salary. Hit submit, the box disappears, and you get on with your day. You feel a sense of accomplishment, a good customer, an organized adult. But what you don't see is the complex algorithm that just roared to life. That data point wasn't merely filed. It was immediately fed into a sophisticated pricing and profiling engine. Let me be clear. The financial industry hides that pop-up has almost nothing to do with serving you better. It's about pricing you better. It calculates the maximum you can be charged for loans, the highest fees you'll tolerate, and the most effective way to market high-interest debt to your phone. You think you're updating a profile. In reality, you're handing your opponent your playbook. That 1% difference for Mike's mortgage, it's not just a number. It's over $83,000. A child's college fund, new cars, a decade of retirement savings vaporized. All because of one click on one random Tuesday. Today, we pull back the curtain. I'll reveal 3 hidden truths your bank will never tell you about your income data. By the end, you'll not only understand the game, you'll know exactly how to win it. The first truth will probably make you angriest. Your income data is an asset you're giving away for free. You think of assets as stocks, real estate, or cash. But in the 21st century, data is one of the most valuable assets. Your bank knows this. They don't just store your income. They analyze, model, and use it to build a predictive financial profile. This digital version of you is an asset generating bank revenue. You are its unpaid supplier. The core mechanism is ability to pay pricing. Simple yet brutal. The more you earn, the more the bank's algorithm believes you can afford in interest and fees. Voluntarily telling them you're making more money isn't a pat on the back. It's a target painted on you. Imagine your income jumps from $60,000 to $90,000. You update your profile. The bank's algorithm doesn't see a promotion. It sees a new target segment. A prime candidate for their Platinum Voyager credit card with a hefty annual fee, high 24.99% APR, and a $15,000 limit. Data says your income bracket takes on lifestyle debt. They know you can afford minimum payments and bet you'll carry a balance, actively selling debt. A $5,000 balance on that card means paying over $7,000 in interest in 5 years. Your $30,000 raise? The bank just figured out how to claw back nearly a quarter of it annually. This is the critical difference. Mike provides his data freely, thinking he's helping. His digital life floods with pre-approved offers designed to maximize bank profit, not his wealth, constantly tempting him with expensive debt. Sarah understands her data is valuable. She treats data requests with skepticism, knowing her income is leverage, not a casual update. She ignores the pop-up. The bank's algorithm still has her filed under her old income, making her less a target for high-interest offers, fewer unnecessary ads. She maintains control. But this isn't just about avoiding bad offers. It gets deeper. Your data isn't just used to sell you things. It decides what kind of customer you are and what you deserve. This brings us to the second, more subtle truth. Truth number 2, they use your income to limit your upside, not just their downside. Banks want income to assess loan risk and ensure repayment. That's only half the story. The other half is they use your income data to calculate the minimum needed to retain you, allocating resources for their benefit, not yours. Think about your debt-to-income ratio, DTI. While DTI assesses loan risk, for existing customers, banks use your stated income to proactively manage accounts, often against your interests. Say you have a $10,000 credit card limit, always paid on time. Your income temporarily dips from $70,000 to $55,000. You honestly update it. To you, an update. To the bank's risk algorithm, a red flag. Despite perfect payments, the system might automatically reduce your limit to $5,000, reducing perceived bank exposure. If you had a $4,000 balance, your utilization suddenly doubles from 40% to 80%. Your credit score could plummet 50 points or more. That honest update could cost thousands in higher interest on future loans, as the bank used your data against you. An algorithm hurt your financial standing. Now consider the opposite. Your income doubles, you update the bank. Do they automatically double your credit line? Rarely. A lower limit is safer. If you want more credit, apply for another product. They hold all the cards. This is the game. Mike updates his income when asked. When it drops, his honesty is weaponized, constricting credit precisely when needed. When his income rises, he sees no automatic benefit. The relationship is one-sided. Sarah never updates her income unless initiating a request. Her financial file remains stable, controlled by her actions, not an algorithm, ensuring she controls the information flow and relationship. This is where most people get confused, thinking every bank request is a demand they must comply with. But understanding the difference between a request and requirement is your most powerful tool to protect yourself. And that is the third and most important truth of all. Truth number 3. You are only required to disclose income in 2 specific situations. Let that sink in. All those pop-ups, emails, and please update your profile banners, they are requests, not requirements. Data gathering missions. You are the target. Banks rely on you not knowing the difference, using polite language to make it feel routine and necessary. It is not. Only 2 scenarios legally and practically require an accurate income statement. First, when actively applying for a new line of credit or account, a mortgage, car loan, personal loan, or credit card. Regulations like the Card Act of 2009 mandate lenders assess ability to pay, protecting them and you from unmanageable loans. When you ask for money, you must prove you can pay it back. That is fair. Second, provide income when asking for a credit line increase on an existing account. You ask the bank to take on more risk, so you must justify that increased risk with data. You initiate the transaction. Those are the only 2 times. Every other time, it's a simple request, and you have every right to decline. Use the "what's in it for me" test. Before typing a number into that income box, ask, am I getting a new loan or a credit line increase right now? If no, then your answer to the bank should be no. Close the window, ignore the email. Your financial data is leverage. Don't give it up for free. Let's see this in a wealth-building scenario. You've had a credit card for 5 years with a $10,000 limit. Your income doubled to $100,000, and you wisely ignored pop-ups. Now, to improve your credit score for a car next year, lowering utilization is key. This is when you use data strategically. You request a credit limit increase, and when prompted, proudly provide your new $100,000 income. The bank's algorithm sees a responsible customer with history and improved ability to pay, approving your request, increasing your limit to $25,000. Your regular $3,000 balance is now 12% utilization, not 30%. Your credit score jumps. You used your data strategically. Mike has been updating his income all along. When he asks for an increase, the bank already knows his salary. No new information justifies a large bump. He has no leverage. Sarah treats her income data like a master key, keeping it safe and using it only to open doors she chooses. Mike leaves his key on the welcome mat, surprised when the bank uses it to lock doors he didn't know existed. How to start acting like Sarah today. Here are 4 specific steps to protect your financial data and take back control. Step 1. Internalize the "what's in it for me" test. From now on, every time you see an income request, ask that question. If the bank isn't giving you a tangible return, like a requested loan or higher limit, the answer is no. This habit change will shield you from 90% of data extraction attempts. Step 2. Understand what legally counts as income. When providing income for an application, present yourself accurately. The CFPB has guidelines. Income isn't just salary. For many applications, include spousal income if accessible, bonuses, commissions, side business income, or retirement distributions. Know the rules to provide a complete and accurate picture of your ability to pay. Step 3. Perform a data audit. Don't proactively correct old income data given banks. If an old account has a lower income on file, that's fine. It may be beneficial, making you a less attractive target for predatory, high-interest offers. Let old data lie. Step 4. The expert level move. Freeze your secondary data reports. Most know the big 3 credit bureaus, but banks also pull data from lesser-known agencies like LexisNexis, SageStream, and Innocuous. These reports contain staggering personal information. You can freeze them, like the main 3. Doing so severely limits background data pulled without consent. It's one of the most powerful privacy moves you can make. We've covered the 3 truths. Your data is a valuable asset you've given away. Banks use it to limit options, maximize profits. You only share it when asking for something in return. Your financial life is a negotiation. Every form, pop-up, and data request is a move on a giant chessboard. For years, banks played chess while we played checkers. Now, you know the rules of their game. Sarah and Mike's difference wasn't salary, it was strategy. Mike gave information for nothing. Sarah used it as leverage. From today, stop being a product on a bank spreadsheet. Be an active, informed partner in your financial life. The next time you see that income pop up, see it for what it truly is, a negotiation. Now, you know how to win. Your future self depends on smart decisions today. Thanking you for financial freedom or asking why you gave it all away. The choice is yours. If this video changed the way you look at your banking app, click subscribe. We release videos like this every single week to give you